Well, Reliance Industries came out and gave out a very strong set of third quarter numbers, even at a time when the street was already expecting them to, report very good sequential improvement. So the street was expecting positive numbers, improvement numbers. They have delighted with a very big number beat as far as their margins are concerned, as their net profit is concerned. Where exactly is this coming from? If you look at the kind of expectations we had from the consumer end of the business, be it geo platforms, digital services, or even the retail end of the business, not only there's a big beat on the top line, margins have actually expanded. So strong contribution coming from there. There is also some amount of changes which have been made as far as their reporting style is concerned in the traditional businesses, commodity businesses, refining and petchem. What they've done is that they have clubbed the refining and petchem into one business. Remember, in last couple of years, always refining and petchem was segregated and the performance was given separately. GRMs was given for the refining side, which was tracked very closely. This time there was no GRM. What they've done is that they've started reporting together how refining and petchem end of the business is under the O2C business, which is oil to chemicals. The management has come out and given rationale that in the global, the way they are reorganizing their business and global metrics are changing, this is the right way to really report. Even if you club the businesses just in a rough back of the envelope calculation to see how they have done, you combine the EBITDA of both the businesses, you will see that the EBITDA is actually higher, which clearly means that petchem end of the business has actually rebound phenomenally as far as their pricing is concerned, margins are concerned, and even volumes. So this clearly shows that there is a good internals of the number, and the numbers have actually improved quite nicely. Management commentary on several of the retail businesses is something the street will respond to, because clearly now we have seen how geo platforms actually is panning out, what they have built, what kind of investors are interested in it. And early interest is now coming in for the retail end of the business, which is an omni-channel model which they are building, online model as well as brick and mortar stores. With the country normalizing, stores opening, and online, which is JioMart picking up, it was just rolled back. It will be interesting what kind of profit contribution and overall contribution to the numbers does the retail end of the business actually bring in. What kind of value unlocking? There was talk of IPOs of some of the businesses this year. All of that is on the investor radar. But purely if you talk of third quarter numbers, they were quite healthy. The stock in the last 4-5 days have gained quite a lot, corrected a bit on Friday because of the correction in the market. But it'll be interesting to see how, with this kind of a strong performance, does the stock react in trade when we open on Monday.